This is the second video in the 100 days revision series of Indian Economics Service Examination conducted by UPSC. So you have the exam in 2026. Previous video we discussed about inflation from different perspective where you can write answers. This video we will discuss national income. In General Economics paper 2, you have this topic before macroeconomics. And national income, here it's not about formulas or calculation like you have seen in the 12th standard examination. Here they will ask the question why and how behind it. Okay, it means how something is calculating, how something is happening, and why. These are the two questions that UPSC is concerned about it. So we will be discussing GDP, GNP, NDP, NNP, personal income, disposable income from a different perspective, not from the basic macroeconomic perspective. Obviously, we'll be seeing those formulas, but here the most important thing is we will discuss from the perspective of writing answers. Because as a student told me in my classroom as well, that they struggle to recall, they struggle to reproduce in the answer copy, and that's how they are not able to clear the exam. So this 100 days series is only for you, so make sure you subscribe for the upcoming videos. Now before we start, I have designed a psychometric test for you in order to test your Indian Economic Service preparation. There are 55 questions, so if you are interested, absolutely free. Link is given in the description or on the support number 7880107880. You can request that test. After filling it, you will instantly get the report on your WhatsApp number. From that report, you will understand what are your weak areas, strong areas, where you need to work, and you can discuss that with me on my WhatsApp number. Okay? Chalo start karte hain. National income is a basic concept of macroeconomics. We have seen that national income, GDP, GNP, NDP, NNP, lot of concepts are there. So what it shows economic activity. So we say US is the largest economy. China is a $20 trillion economy. India's aim is to reach $5 trillion economy. How? By this. So this is how we calculate. So it is used to study growth, development, and structural changes. I know that GDP is not the only correct parameter, but yes, it is near to possible where we get the real picture for the policy makers. So this topic is important for theory, data interpretation, and answer writing. In the past year question paper, you must have seen these things. If you want compilation of PYQs, subject wise, topic wise, you can request those in our support number as well. Okay, I have segregated topic wise PYQs for, I can say, last 10-15 years. Okay, so it will save you a lot of time. Now students often confuse between domestic and national concepts. You must have seen gross, net, market price, factor cost, and these concepts must be clearly understood. Now for example, this is domestic and national concept. It means anything producing within the territory of India is the part of GDP. Whether Toyota company in Japan installing a plant in India, producing cars in India, it means that income, that GDP, gross domestic product, will be added into India's GDP, not Japan's GDP. Okay. And here we talk about national concepts. It means in simple sense that any Indian company or any Indian individual earning money, earning profit from giving their services abroad, that will be considered as the gross national product. It means first here in domestic you have to ask the question where, and in the national you have to ask the concept of who is producing. So these are the certain concepts. Here you can say gross, net, market price, factor cost. So market price is MRP by putting all the factor price. It means the factors involved in that like wages, etc. Gross versus net is the main differences of depreciation. Okay, so we'll see in the later on slides as well. Now the basic concepts: GDP, value of final goods, as you know the definition is very popular. Okay, final goods and services, so both goods and services produced within domestic territory. So anything producing in India, suppose for example this is India, by anyone is the part of GDP. GNP means GDP plus net factor income from abroad. You must have seen that NFIA. So it means Indians giving their services or producing outside but taking profit back to India, part of GNP, not GDP. Okay, like in my example, Toyota, if taking profit back to Japan, then it is not the part of India's GNP. Right? So you have to subtract that. That's why the word net factor income from abroad. It means India's income plus foreigners' income from India to abroad. Okay? Now NDP, that is net domestic product. It means from GDP, if you deduct depreciation, like for example, in an economy, machines are there, transportation, laptop, lot of things are there, and multiple times they lose value. Suppose for example, I am the owner of any logistic company and I use bikes to deliver certain things, and I use loading rickshaw. They year on year lose value. So if you deduct those, then also you will get the real picture of the economy. That's why depreciation. NNP is GNP minus depreciation. From gross national product, if you deduct depreciation, you will get NNP. So national income is generally linked with NNP at factor cost. So exact details you will get. Here another concept known as personal income. It means income actually received by households. So personal income and national income are two different concepts. National income means income earned. Personal income means income received. So for example, if I receive in a month 50,000 rupees, in that 20,000 I have earned and 30,000 I have received from maybe interest, from maybe a past payment that is pending, that has come right now. So 50,000 will be as personal income. But national income means income earned, जो कमाया गया है ना. Disposable income, suppose for example my salary is 50,000 rupees, but after deducting taxes and other deduction, I left with 40,000 rupees. So here you can say disposable income, personal income minus direct taxes. So 50,000 minus 10,000 is 40,000 is disposable income. Disposable income in simple sense, the income available to you to spend in the market, and an actual amount that you receive. Now methods are very important, methods of measuring the national income. First is product, second is income, and third is expenditure. In simple sense, these all three should be equal. Okay, let's see how it is. Number one is product method. It means sum of value added at different stages of production. So suppose I'm making a bread and I take wheat from farmer, flour, and then we can say from the baker, final bread. So at every stage, some kind of value addition is happening, and at the end of the supply chain, I'm getting the full loaf of bread. That is what we call product method. So every value addition in certain thing is the part of product method. Like for example, car you are making. So tire you are putting, steel, glass, everything. Finally, the car is there. So at every process, every stage of production, extra value added will be calculated, so that double counting should not happen. Okay. Then income method is very simple, sum of wages, rent, interest, and profit. So if you forget this full form, you can remember like this, RIP, and you can put W. That's a like easy way to remember. Okay. So wages earned by labor, rent on the interest and interest on capital, rent on assets, and profit by entrepreneurs. Okay. So suppose in this building, money earned by landlord is rent. I am a labor here teaching. After the lecture, I will get wages. And if I put capital into fixed deposit, I will earn interest. And as an entrepreneur, it means the owner of Ecoholics, if I earn extra money, that is profit. Okay. So this is how income method. Next is expenditure method. You must have seen y is equals to c plus I plus g plus x minus m. And you must have seen this equation. So sum of consumption, investment, government expenditure, and net exports. So you must have seen this. Here I'll write, if you can see. So y is equals to c plus I plus g plus x minus m. Very famous equation you must have seen. So consumption means household, what household consumes, goods and services. Okay. Next we have investment. It means firms made investment in machineries. And then we have government expenditure. So government is spending on roadways, infrastructure, etc. And export and import. So plus minus, and export creates demand. So here this is called expenditure method. Now all three methods should theoretically give the same result. How? I'll explain. In the product method, in our example, suppose we were making a bread So suppose for example that bread cost 100 rupees. Now this bread cost 100 rupees. In the income method, from this 100 rupees, labor will earn wages, entrepreneur will earn profit. So it means this 100 rupees will be someone's income, and this 100 rupees, those who will receive the income, they will also spend. That is expenditure. Either business owner will receive, employees will receive, or it will be invested in terms of capital. So that thing, it means all the money, 100 rupees, 100 rupees, 100 rupees will be equal. Only the final goods we take, okay? Final goods and services should be counted. Double counting must be avoided. Like for example, in car, tires already calculated. So don't calculate tire production as separately. Okay? But there are certain things, problems are there. Like for example, problem of milk. So milk, suppose you and me are buying for making tea or using in our household, that's final consumption. But milk bought by a sweet shop for making sweets, that's intermediate goods. So there are certain problems in the calculation, we'll see later on. Transfer payments are not included in the current production. Like for example, pension. So currently I'm not producing anything, but I'm receiving money. Unemployment allowance, scholarship I am receiving. So these are all called transfer payments, are not included because the reason is they are not the part of current production. Okay. Now difficulties in Indian economy in measuring national income. This is the where you will get the question. Okay. If you are serious about answer writing, I have an ebook of how to write answers, introduction and all. So you can request that in the support number, which is also absolutely free. Okay. But only for the serious aspirants, okay? Because that, if you're not preparing seriously, if you're just casually seeing, it may change the course of your examination. Okay? So large non-monetized sector, it means in India, there's like a lot of people, those who are not reporting their income. Like a person selling chai, they're taking money in cash, doing everything in cash, not reporting to the government. Okay? The non-monetized sector where people are not able to take money, like for example, household work. Like for example, I am doing certain work which is not earning me money. So this is also not counted. Okay? Informal and unorganized activities, like I told you, the example of chai wala. Lack of proper data. So if there are someone, but they are not reporting, so we don't receive the data. Government is not receiving the data. Like for example, in India, after demonetization. So demonetization is having pros and cons. But what the biggest positive thing is about the UPI payments. It means in order to receive UPI payments by the vendor must have the bank account. If they have the bank account, their income will be reported. And when the income will be reported, it will add into India's GDP. Because if India's GDP calculation problem is solved, I can bet you right now we are $5 trillion economy. Just because we are not having enough data. Okay. Illegal activities in Indian economy are also not fully recorded, because obviously these illegal activities are not formally reported. So again, cash transactions, difficulty in valuing self-consumed output. For example, I have grown a tree for tomato, taken tomatoes from it and using it for self-consumption, not added. Difficulty in separating final and intermediate goods. I told you the example of milk. Milk for you and me is the final consumption. For milk for sweet shop, it's intermediate. So in developing economy, correct the estimate is more difficult. So we are getting that. And again, here पे पता नहीं क्यों Indian economy service लिखा रह गया, ठीक है? So correct estimation is more difficult in developing economy. The reason is all these, informal sector, non-monetary transactions, lot of things are there. Like people teaching tuitions, they don't report. Why national income matters? It's a very important slide. Answer writing. This is a very important point for your answer writing as well to understand. Okay, it helps compare economic performance over time. Like how you compare Indian economy with other economies, how you compare India's performance in comparison to the past year. Okay? It helps study growth and structural transformation, how India moved from agriculture to industry to services, or from agriculture directly to services, now moving towards industry back again. So structural transformation India is able to see, any country for that. It helps in policy making, like if this sector is growing, government should push that. And development planning, where exactly government has to do the infrastructure development. It compares sectors such as agriculture, industry and services. किसकी performance कैसी है ना, their performances. It is a key indicator of macroeconomic health. Like for example, if you do lipid profile test, they will tell you this is a sugar level, this is a vitamin level, and this is your BP level. A lot of things are there. So on the same lines, this is important for India's macroeconomic health. So clear understanding of national income improves macroeconomic answer writing in the IAS examination. Okay. So I hope you enjoyed the video. You understood how you have to study national income from the perspective of UPSC, not from the school textbook. As I told you about psychometric test, you can contact on this number plus your answer writing ebook. That will help you. Okay, chalo. We'll see you in the next video. I hope you enjoyed. Don't forget to subscribe because this is the second video in the 100 days series. 98 more to come. If you missed the first one, go back and watch it. Apart from that, 100 days series are also running in shorts, in Instagram as well, Instagram Reels. So you can follow us there. See you soon. Jai Hind.